Hey, Joe. Thanks so much for joining the podcast. How you doing?
I'm great. Thanks for having me, David. I really appreciate it.
Yeah, my pleasure. Joe, we run into each other often. I feel like ever since I've been out at events in the city talking about work at CFO Hive, you seem to be at many of those same events and talking about the great things that you're up to. And so, funny that we find ourselves here. But are you active on the event circuit?
Absolutely. I think we sort of touch upon the same ecosystem of potential partners, clients, service providers, right? And those include M&A advisors, business owners, private equity, investors, bankers, lawyers, accountants. I mean, those are all pretty influential people for business owners. And that's one of the reasons why I enjoy those events, is because you really need to have that sort of network, that broader view of your world.
Yeah, I agree. And there's sort of an ecosystem all going after the same thing, which is value creation for businesses. And they tend to be, less established, but still quite established. So even that mid-market, lower mid-market, it's amazing how big businesses can get and still haven't done some of the things that, can, greatly enhance their value. So you get together with folks that are helping them in different ways. It's a really awesome environment to be around. And I think we also share this background of having kind of been in it and spent our careers learning and developing and growing and doing before getting into the market, and in this regard and trying to help. Tell us a little bit about your background and your story, which I know could maybe take the whole podcast, but if you can, just sort of condense and say, how'd you get into what you're doing now?
Yeah, I'll give you the Coles Notes version, but I started my career in financial services, in banking, for over 10 years. And I worked, in different functional groups, built up a lot of the functional leadership, technical skills that I then, applied to the distribution industry, technology distribution, because that's sort of where I wanted to focus my career path. And after building a business inside of a larger company, I had the opportunity to go and do that for another company, a smaller company, a specialty distributor called Interwork Technologies. And I spent 9 years there scaling up that business, taking it from 40 million in revenue, barely making a profit, had some cultural issues, some business operations issues, and scaling that to 80 million in revenue before I exited to private equity, and then staying with them for another 2 years. And we hit 100 million in 2 years, and we sold to a strategic buyer. And so, and then from there, I did some work in the startup world and software startup. And that sort of moved into doing some work with business owners on the advisory side, but also on the interim executive CEO side of things. So, and that's sort of where I'm at right now, is continuing that work, helping business owners with their scale up, exit, professionalization needs, reducing founder dependence.
Awesome. That was condensed. I know there's a lot more there that we can get into, and I'm sure we will go back a little bit throughout the conversation. But would you say industry-wise you're specialized, like is technology or software an area of focus, or would you say it's more broadly some of these principles can apply across all or a range of industries?
Yeah, I would say it was focused. It was focused on technology, even though I had the financial services and fintech experience and, distribution experience. But I've been working with a number of companies in different industries, and the problems are the same, right? How do you grow revenue? How do you unstuck, the business? You all, get into these, plateaus where you get stuck and you got to do something to reinvigorate the business, or there could be some, issues or problems inside the company's culture, just the way they're doing things. And so those are all universal. Professionalizing a business, mitigating founder dependence, those are universal problems that touch every industry and every small business. And so I realized that what I learned scaling up a business, going through that exit process a couple times, is that those are all transferable. So the domain expertise around a specific industry is less relevant and less important than the skill set involved in leadership, building, professionalizing, and scaling.
Yeah, that's something that's been quite topical for me because I just think there's a difference in perception and reality on that one. And a lot of business owners tend to overweight the industry experience and think no one can really learn their acronyms. And not all. I think some, not all. But CFOs that we work with, CEOs that are fractional, or COOs that are fractional, I would tend to agree. And there's a predominant view on that within those groups, that those are learnable, and it's the skills that you need that are more important, or, the experience. So if you've never exited a business, or, grown a business and then exited a business, I don't care how many years industry experience you have, you're going to struggle the first time you do it. Yeah. Anyhow. So on that note, the scaling and the exiting, I'm sure there's quite a list of do's and there's quite a list of don'ts. Can you share a little bit around some of those?
Yeah. So on the do side, it's around, again, professionalizing your business, building it for scale, spending more time working on the business versus in the business. I think that's critical and paramount. As well as removing dependencies inside your organization, whether it's dependencies around you, the founder, or dependencies in other parts of the organization. I can get a little bit deeper into that, but those are some of the do's. Some of the don'ts are, building one-person departments, financial statement, lack of financial statement transparency is a big don't. And we can talk a little bit about that. Definitely a relatable point for you. Making non-data related decisions, relying on intuition to make your decisions. We can't do that anymore. Especially when you're trying to scale up and exit, you have to rely more on data-centric decisions. The last don't, there's many, but assuming you will sell the business when you're mentally ready to exit. So many business owners say, I'm not ready now, I'm not going to go into these sort of motions or processes around professionalizing and scaling and preparing the business when I'm not mentally ready to do that yet. I'll do that when I'm mentally ready. The problem is, once you get there and you are mentally ready, you realize pretty quickly there's a lot of things inside the business that you need to address, whether it's fixing or structuring, or perhaps moving the business in a different direction that will attract more buyers for you. And that takes sometimes years to do. So there's this, disconnect or misalignment between business owners thinking they need to be mentally ready to sell, to start thinking about exit planning and exit readiness.
Yeah, and there's something interesting around, a lot of times we tell our clients or businesses we talk to, this is something you want to start as early as possible, a couple years out before you anticipate selling. But something like I would compare to, we'll get a lot of folks asking for help because their banks are, asking for greater levels of reporting that they're not able to deliver on, historic or future oriented. We're not just doing this to help you check the box for the bank. This is going to help you unlock value, enable the business from a strategic perspective. If you're not able to generate this type of reporting on a day-to-day in your business, you're leaving something on the table from a performance perspective. And so I think the same thing applies to the things you're talking about that these owners should do to prepare for an exit. do it anyways. Almost act as if you're going to sell, even if you're not ready. Is that something you tend to share as well?
Absolutely. It's the one thing, it's my biggest mantra is that exit planning is actually part of business planning.
Yeah.
And when you incorporate that into your business planning process, a lot of insights and aha moments start to emerge about how to build your business for that eventual, in the direction of an exit. And so, a lot of, times, an exit is defined as the owner completely selling and getting out of the business. It could be acquiring or getting minority ownership, getting some private equity partners. It could mean some succession inside your business or your family if it's a family-run business. There's so many different aspects to it. But the elements of exit planning form a really important part of business planning.
Yeah, no, that's great. I like that way of putting it. When we talk about preparing for a sale and we talk about becoming marketable to find those buyers, what are some of the steps involved with that becoming both scalable or ready for scale and marketable as an asset?
Yeah, the biggest challenge and roadblock for a lot of business owners is they get stuck in their business because they grow it to a certain level, and then it's really hard to grow exponentially from that point onward. And a lot of it has to do with your headspace. You can't grow your business bigger than what your headspace can occupy, right? And if it's occupied by a lot of tactical business operations related things, it's sort of detracting your ability to work on the big items, the big fish, so to speak, the big projects, the next market, the next region, the next product, the next, whatever that may be. So one of the things that I talk about as a first step is mitigating and removing that founder dependence in all aspects of the business operation. And that's really important. And you do need to grow to a certain size to be able to do that. Typically, I recommend this for business owners that have north of 25, 30 employees. Removing that founder dependence is a big part of it. And that includes how decisions get made in an organization. And if all paths lead to the business owner or the founder, that's an issue too. So you have to create some, decision, parameters so that you can build a more autonomous organization, which includes reviewing your systems and your processes. It means professionalizing the business, starting with two key functional groups, including sales and marketing, and then business operations. So those are sort of the table stakes to even building a scalable, marketable asset, because your ability to exit the business, there's a huge impediment if it's dependent on the founder.
And it's interesting, you mentioned employees, 25 to 30, I think you said, as maybe a starting point. Why do you think in terms of that and not necessarily revenue? Or do you also think in terms of revenue? Is there something about just having number of people that you can start to delegate responsibility and know-how, and you just need bigger structure to be able to do so?
Yeah, you do need a minimum number of people to be able to do that, because the reality is you can't mitigate founder dependence if you're a 5 or 10 person operation. The reality is, the business, you're still in startup mode technically when you're that. Even if you're a mature organization, it's very hard to run a business and not be working in the business when you're that small. So really hard to do. But there are some strategies to help mitigate that so that you can get to that next level of growth and that next level of size.
Yeah, I love that. I think the headspace thing is powerful because there's a psychological element here, and it's not just the professional, it's the personal and where our headspace is at. We can only sort of think about and do so many things at once. And so even if you have an occasional thought around, I know I should be doing some of these things that are, better for my business for scale, then Monday morning comes, another week goes by, another year goes by, and you haven't done those. So breaking out of that, I assume there's a lot of psychological aspects here that you're advising folks on.
100%. Sometimes, you feel like you're a psychologist, working on these with business owners, but, a lot of it comes down to trust, control, the ability to delegate effectively. I'll just do it myself because it'll be faster, and I know it's going to be of higher quality than if I delegate and have to oversee someone else doing it. And that's a very common trap that we all get into as business owners. It's quite common, and it does take sometimes someone else to sort of pull you back from that and remind you, like, you can't be doing that indefinitely. Yes, sometimes you need to go into the fire, but it's really important to sort of recognize and have that self-awareness that of catching yourself doing things that you shouldn't be doing.
Just like a double click on some more tangible things that, someone helping a business like yourself would go in and actually do. So sitting down with the founder, owner, manager, CEO, understanding their motivations, their goals, and if you get to a place where like there's an exit in mind or building towards that, and these steps that we're talking about to reduce dependency on them, is a lot of that, like what does that look like? Just to give a little bit more of a tangible sense to it. Is it, documenting process, starting to say who can do these things beyond the owner? Like, what does that look like? Give a bit more color.
Yeah. So, the very first step is doing a bit of an inventory on what you do on a daily basis. What are you doing today? What did you do yesterday? What did you do last week? What did you do last month? And then last quarter and last year. And doing that whole inventory is a very important, first step in the process, so that you can sort of start mapping out how things need to move around. And things do need to move around, whether it's bringing in different types of resources with different skill sets, or if it's, around changing processes, around decision making, around how your systems flow, about how your reporting and information flow inside and outside the company. Like, those are really important, starting points. Yes, documenting your processes are really important. And there's so many tools nowadays that you could do it a lot more efficiently. But again, you shouldn't be the one doing it. It should be someone else doing it. And supporting you on it. But there's so many more tools available now to document and video all of your processes and changing them and managing all that. So that's a really important part of it. But if you're doing that and you're still embedded in every decision of the company and embedded in every process flow, then it defeats the purpose, right? Documenting is important, but how are we now executing as business owners? How are we behaving on a daily basis in the context of having that?
Is AI a big part of sort of the way to process document now? Is that
100%? Yeah, there are so many tools available now that can help you do that, and because it is, and one of the reasons why it wasn't always done before is because it is a tedious process, right? It's very time consuming. You have a business to run. Your teammates, the people you're working with also have their own full plates, their duties and responsibilities. So I think, leveraging AI tools to do that makes it a lot easier and painless for sure. And they should be leveraged. They're usually pretty cost-effective tools to do that.
Yeah, and I can imagine just sort of that bridging of what it is, current state, and what it should be in a reasonable manner for where that company is or where they need to be. Like, there's a disconnect that you need to bridge as well. It's not just taking what you do today and institutionalizing that across the business. There may need to be enhancements. There may be things you're not doing today. Your control environment. I'm just thinking about even from a finance function perspective, you may not have segregation of duties. And you say, well, you need to have that. If the CEO is the one signing every check, it doesn't mean that you're going to say, well, now Joe is signing every check. Great, you've delegated. Well, maybe there needs to be more approval and review and signing. I assume AI can also help just make that process a lot quicker show what good looks like, where are you today, and help build that documentation.
Yeah, and where those gaps are, and there's lots of tools available to help you with building handbooks and procedural guides and all that, and they have those sort of built-in prompts around how to build in backup and redundancies inside your organization, or at least ask you the questions so that it exposes those things and brings them to the forefront.
Yeah. So these are things that, if they're absent, are going to hurt your valuation. Maybe kind of even the flip side, or adding some of the enhancers. What are things that impact valuation that you've seen, in acquisitions?
Yeah, there's a few things, and sometimes first off, we need to make a distinction between valuation and then the terms of a deal, because a valuation may look attractive, but the terms and conditions of a deal are really where the business owners can sort of benefit or not benefit. And so in terms of what could impact valuation, it's around the typical items around is this a risk to acquire? What are the risks of acquiring this company? And how can acquiring this company add to their own value? And a lot of that has to do with diversification of client and vendor base, diversification of products, having those backup and redundancies inside your organization. Consistency of financial performance builds confidence. So the biggest aspect of getting a good offer for your business, and also getting multiple offers for your business, is the confidence that an external buyer can see in your business and saying, okay, you know what, this business is performing consistently. Maybe it's not growing 50% a year, but they would take 10% growth over the last 5 years consistently, over 50% one year, down 10 or 20% the next year, and having those wild fluctuations. That makes buyers unsettled. And so, having a track record of financial performance, consistency, making sure your ratios are in alignment is really important for confidence building. But the other thing that is important for confidence building is the due diligence process, and having all those documents, reports, and things that are asked for during the process ready and available, so that you're not scrambling and do not appear to be scrambling when those things are asked for. Again, those all build confidence. What I suggest for a lot of companies around the valuation side is get a valuation done by a professional. Let them look at your business, look at your quality of earnings, look at the key risks in your business, give you a really good perspective and report that you could then take and say, okay, well, these are the areas that if we worked on them could drive additional value to the business and increase our valuation. So using tools like that, I know they're not inexpensive, but over the longer term, they can be very, very valuable.
Yeah, and again, as you said earlier, it links to business strategy, and so if you have a valuation, that's pretty handy to understand what are the drivers of value in your business, and are you focused on all the right things, and should you be tweaking along the way. Obviously, you're not just looking to spend on things that you don't need to. So, but there are different ways to get valuations done. It doesn't have to be a formal Big Four accounting firm or some, fancy consultancy. Not that Big Four are fancy consultancies. They're great, but the ways to get there, just to kind of get that information, vary. So totally agree that's an important step. When it comes to the process and an organization undergoing that kind of change, preparing for potentially, let's say, a sale, it starts at the top, and but then it also impacts everyone in the organization. How do you think of culture and communication, and how do you manage that throughout a process?
Yeah, it's not easy. I mean, I think one of the biggest things that I've learned over the years is transparency is critical. When you're transparent around your vision, your mission, around company performance, around how decisions are being made, the why around decisions is really important for people to understand. So that helps get everybody invested in, what needs to be done. Obviously, you can't disclose to everybody in the company, hey, we're in the process of, wanting to prepare, an exit. But at least within your senior management team, there are certain things that you can do to prepare for that. And then within your senior management team, those sort of filter down throughout the organization. So ensuring your communication is consistent is really important. Defining your decision-making parameters, again, is really important. People understand that they may not agree with the decision, but the next best thing is understanding why that decision is being made and what were the factors that influence those decisions, right? Because if you're going through periods of rapid change, whether it's scaling up or perhaps maybe even outsourcing a department, right? Those are really important fundamental pieces there, so that it doesn't become toxic or uncertain, where people are on edge and anxious to the point that it becomes a distraction to their own roles and responsibilities and to the broader organization.
Yeah, and so is that a whole planning exercise? Who do we have? Who's critical to this process? Who might stay on for a role? Understanding individual motivations, and then how do you align those, with incentives?
Well, here's the thing: if you normalize the exit planning process as part of your business planning, then those alarm bells, those first instincts of anxiety and insecurity don't sort of seep into even your senior management team, right? So when you normalize it, you're actually saying, hey, this is part of the process. We might never sell. We might sell tomorrow. We might sell. It doesn't matter. It's how do we build our business differently if we were to go in that direction. And so it's just really important to make sure that is solid at the senior management level. Obviously, it'd be nice to have people on your senior management team that have gone through that experience with other companies, because they can provide a lot of value through the process too, because they know what to expect, especially if it's a first-time business owner who's never gone through the process before. Surrounding yourself with a few folks that have gone through the process at different levels of the organization is very, very helpful.
Yeah, I like that. Normalize. I would have thought of that in a different context for this conversation, but normalizing just the idea of talking to people about, what's our business worth? What might a sale look like? And I think bringing people on that journey as far as growth and not being sort of afraid to change. I think those are all healthy organizational traits.
Yeah, and just asking your team, like, who would want to buy us? Like, what can we offer to them, and what's actually missing from that would make us even more desirable, even more marketable, and that could lead to some really interesting findings and suggestions and recommendations right from inside your management team. It doesn't have to be all coming from yourself.
Yeah, and I think the growth that they can have professionally, seeing through a process like that and getting to the other side, and even if there was need for them to make a move after that type of transaction. Look at you, Joe. You've seen companies exit and have built a business around going through scales and exits. So the other side of those transactions can be, obviously monetarily is going to look different for different folks within the organization, but growth-wise, I would assume everyone, can benefit from the type of experience they'd get.
For sure.
Yeah. So shifting to the finance function, and I'd love to hear from you on, where you tend to see the function relative to other aspects of the business when you engage with them.
Yeah, so it's quite often that I find that the finance function is underdeveloped, and oftentimes it's sort of commingled with finance and accounting. They're two distinct areas and functions of an organization. And so a lot of times what I see is they're typically managed as a tactical function, like bookkeeping and contract management, the tactical side of the numbers, the reporting. Another challenge that I see is small companies sort of insourcing the financial management with lower level roles, sometimes even without accreditations, So I know that sometimes companies start out that way, but then as you grow and things get more complex, those people need to also evolve. So the lack of, having a financial executive on staff, or even, a fractional, senior, fractional financial officer is really important to the process, because it introduces a different layer of the strategic planning process in terms of, asking the what, what do our financial statements need to look like if we're going to fundraise or attract, other forms of capital or potentially sell the business. What do they need to look like? How do they need to be structured? What data do we need to collect inside the organization? How do we report it? How do we distribute it? So there's a lot of questions around the what that a company needs to do that is critically important and is served by the CFO of an organization. Obviously, a lot of small companies can't afford to have a full-time CFO on staff for those critical questions, around that. But a fractional CFO can be very instrumental, even from selecting different systems that you have to, scale to or build towards. For example, moving to a new ERP system, moving to new, financial, control systems. Like, those are really important decisions that a CFO would play an active role in participating in.
Yeah, I think that's great advice. And a lot of times you may not need the CFO as far as the day-to-day, the doer. Even at the helm of your finance function, it might be suitable to have a controller level individual. But I would always suggest getting that type of expertise to advise on what that should look like before owners who may not, that just may not be their comfort zone, make a call on who and what. And then, the ERP, for example, I mean, you can go down a really difficult path that's really hard to unravel if you choose the wrong ERP, if you choose the wrong leader of your function. And so probably a good idea to go to the right expertise, get the guidance you need, and then get out of that and get to what you need. Yeah, maybe just shifting gears. We're in a really interesting environment, a lot of change. We talked about AI. That's a big one. I don't like to say buzzword because I think it's real and it's going to change the way we do things in a significant way. But there are a lot of other factors. What trends, what kind of, let's just say around the corner things are you talking to founders and leaders about these days that they should be thinking of?
Well, I think in this climate, it's around, the normalizing also uncertainty. We're finding ourselves in a world where there's more frequent black swan events happening. It's not just, every 20 years, it's now every 5 years and maybe even 3 years. So black swan readiness is a really important aspect, building resilience. So I think in all of that, what's around the corner. We don't know what's around the corner. That's part of the problem, and so building resilience inside your organization to be able to withstand shocks is really important for the business's sustainability as well as its growth. Looking at your diversification of revenue, of your vendors, of your clients, ensuring you have robust systems and processes, making sure you have backup and redundancy for every part of your organization. And that doesn't mean you have to have that inside of your organization. You can leverage third-party service providers like yourself to provide that. So I think part of what's around the corner, it's just being ready for the unexpected.
Yeah, great advice. That's what we know. That we know that something's going to happen. We don't know what, but something. And so, how do you mitigate those risks?
Yeah.
Yeah, and that's really hard to do as well. Again, back to headspace when we're in our business. For me, that's where the forward-looking, the budgeting, the FP&A helps trigger some of those what if types of thinking, because you always want to have scenarios when you're looking at financial models and projections, and I think that kind of cadence forces CEOs to sit down and think about it, whether it's monthly, quarterly, but the finance function can really empower the CEO and other leaders in the organization to think about what if, because you start going through, here are some of the assumptions, and they'll say, well, yeah, what if interest rates were 3 times that? Just getting the thinking is I think a huge enabler.
CFO's headspace is exactly asking those questions, and it may not be inside the headspace of a business owner who's trying to, get that next big client or that next big executive hired over the course of the next couple months. So having that resource there, asking those types of questions, forcing the issue, forcing the questions so that they get up on the radar is really important.
Right. So if you had better cash management, for example, and you had just, the rainy day, longer runway, maybe access to financing, because you had thought about, well, what if we lost all of this, this customer base? And so you plan for that, and then suddenly it's tariffs or COVID and there's a shutdown. So you don't need to know exactly what's going to happen, but you need to know that things will happen.
Right. And how do you prepare for that? So for example, there's a lot of small, mid-sized businesses that don't have, an operating line of credit, right? Whether they need to use it or not. Well, as you know, it's better. The best time to get credit is when you don't need it, right? So doing that in advance when things are going well, getting access to tools and like a credit line is really important, because sometimes there will be those short-term shocks, and you need to have access to those kind of tools to get you through it.
Okay, black swan resilience. I like that. Okay, shifting gears, I want to talk a little bit about passion, which is a word that I find interesting, because it's for me been challenging throughout my career, because I started out wondering, what's my passion, and felt this pressure to find my passion. And I just think it's an evolution that you move towards. And I get this sense from you that you have discovered, work and what you do, beyond paying the bills, and really something that fulfills you. And so I'd love to hear about the evolution for you of that. Did you start off day one when you got into banking and say, I love this and I know my path? Or did you figure it out over time?
Well, I just love building business. First and foremost, that's my passion. My second passion, which I'd put at the same ranking to that is helping others. And so, as I've gone through my career and built businesses in different capacities and different companies and verticals, et cetera, I've now sort of, encapsulated all that and now looking at, how do I help other business owners and founders with some of the things that I struggled with or that I figured out along the way through the help of others, people that helped me along the way too, is really important. So, when you take, those two, building and helping others, and you put them together, that's my happy place. I love learning. I love, learning through others and, sharing those experiences. And so it's just a very gratifying experience along the way, because it's lonely being a business owner. There's not too many people you can talk to that are, I would say, qualified to talk to about some of the challenges or opportunities that you're confronted with. So I'm always a big advocate of peer groups. I've been part of a peer group, CO Global Network, for 13 years now, from the very first business that I started running. And it's been an invaluable network for me. And
what about it do you find most valuable?
Well, they have three components. One is the group, the peer group that you're in, which is a diverse set of CEOs from different industries, different sizes. So your lens around different business problems significantly expands. So the group aspect is really important. You have a group leader who's also being a CEO. So very relatable, and you get personalized, one-on-one, coaching. And then there's a networking aspect of it. So you're getting coached, you're learning and sharing, but you're also have the, access to, a network that you can build upon, draw upon, and share with. So that's why I love it. Everybody should be in a peer group. Obviously I'm an advocate for the one that I've been a part of, but I think for every business owner, there's so many, different groups and services available. As a leader, as a business owner, you have to continue to learn and evolve and, build your leadership skills and adapt to different things. We're going back to the uncertainty and the black swan events and other shocks that a company can go through. Each one is different. Each one is distinctly different from the other. And so you have to adapt to that and be flexible. And so having access to people who may have gone through the exact same thing before is really important, but also people that you can go back to and just consult and ask and bounce your ideas off of is also important, because business owners are inside their own head a lot. And they're constantly having these, conversations and debates inside their own head, and you need to sort of get it out and get some other perspectives on it.
It's a great way of putting it. Yeah, getting out of their own head. This back to headspace again. That's kind of the theme here. Going back in your own, and we ask our guests on the podcast this question, going back personally, professionally, what advice would you give your younger self that you didn't know then that you know now?
Yeah, it's that, careers are nonlinear, to always choose the path of learning. Like, what is a great learning opportunity, and choose the path that aligns with your passion and with your interests. And then surrounding yourself with a diverse set of peers from different backgrounds, like I mentioned earlier. I mean, if I could, when I think back in my career, I should have done it sooner than become, when I became a business owner and CEO. And so I encourage people to do that at every stage of their career. And, those groups change and evolve over time. And so having access to a group is a constant in your life. The groups may change, but having access to a group should be a constant in your life. And I think that's one of the big takeaways that I would pass on to others.
Great advice. And a newly added question to my podcast is probably self-serving, because I'm constantly on the outlook for, great podcasts as I walk my dog or, work out. And so what do you listen to? What can you share with our guests that are some of the podcasts on your playlist?
Well, I only listen to your podcast, so I mean, it gets me everything I need. Actually, I listen to more, books, like audiobooks, and less so on the podcast. But it depends. I sort of, whenever I have an issue or a challenge or somewhere I'm stuck with, I'll look for a book and or look for some online content that can help me with it.
Yeah, I find the audiobook more suitable for there's just going to be like a drop off in how much I'm taking in, and I feel like with a book with many books you got to take in every line, so it's sort of the right ones that I'm okay missing a little bit, because you get distracted. Like if I'm out and walking the dog, there's distractions. I don't know if you find that it's for a certain type of book that it makes sense, and for others, it doesn't.
Yeah, it just depends on I guess what is it that you want to gain from what you're listening to? Is it relatable? Are you listening to it because there's something you're going through and it's going to help you through it, or is it just general learning, or you just really enjoy those particular themed podcasts, or maybe you're a fan of a certain speaker? So it's very individual. So it's hard to really say. I mean, if I'm walking the dog, I've actually tried to not have earphones while I'm doing that, and because the day is just so busy and we're taking in so much information all the time that sometimes you just need to have a quiet moment, just observing what's around you and enjoying that. So sometimes it's very situational and individual, but that's sort of what I do.
Yeah, I just looked it up to confirm I had the right title. Built to Sell. Okay, so that I will give a recommendation that's tied to this topic. It was Built to Sell, and it was just sort of taking, I think, a made up story about an individual that owns like an ad agency or a marketing agency, and very much centered around him. And he went to see a coach or advisor, mentor, who helped him, set the business up for a sale. And so walking through all the aspects of his business that he had to shore up, and it was just easy to read.
Yeah. And they have a podcast too, so I do listen to them from time to time.
Oh, do they? Okay.
Yeah, and
okay.
they go
It's
through different business. They interview different business owners that have exited, and it's really great because they have different situations. It can be relatable to any business on earth, and so I would. Thanks for reminding me, because that is one podcast I do like to listen to.
Okay, good to know. I got it out of you. All right, Joe, anything else that you wanted to share with our guests before we hop off?
No, I just wanted to thank you for your time, and also I know this is the nature of your business, but I think tapping into fractional resources to serve different parts of your business, and that planning process is critically important. And so that's one thing I advocate is leveraging third-party service providers for some of these things. And you don't have to do everything in-house. You don't have to hire for every single function that you need. Actually, business owners are not always the best qualified to hire for those resources, right? So I do lean on service providers more frequently for specialized skill sets. And because I know that's the business that they're in, you interviewing for a CFO is going to be different from me interviewing for a CFO. We can interview the same candidate and we'll have completely different perspectives on it. I may think they're great. You may think they're incompetent, you know? So I think it's really important to tap into your third-party service providers, identifying who they are. They're the specialists, and make sure that you're building those relationships, and so that they're just one phone call away.
Yeah, that's really helpful advice, and I think there's not a lot of folks that say, the minimum to engage with me as a fractional fill in the blank executive is X times a week or month, and so if it's a monthly touch point, but you're getting from them the kind of guidance that would help you hire the right people, build the right structure, get the right things in place. You could effectively build, a multidisciplinary C-suite level in your business of any size and make it super accessible. I'm a big fan as well. So thanks for putting that out there. And thanks so much for taking the time to do this. And really appreciate it, Joe.
Thank you. Thanks so much, David.